Hi, good evening. Today is July 27th. We had a little sell-off in the market today. S&P 500 ended up being down about 0.5% after it has recovered around half of the intraday drop to 43.65. We have expected a little pullback before the Fed meeting last time we spoke on Friday, and the sell-off allegedly was caused by the panic about, well, the little panic about COVID and masking and all that comes with it. California and New York City will now require all public workers to get vaccinated or submit weekly tests. And now Biden said that he's thinking about making vaccines mandatory for all Fed employees. He hasn't done it yet, he is still considering. And now CDC all of a sudden has changed their guideline to recommend that vaccinated people resume wearing masks indoor if in the area of high rate of infection. They never really said specifically which areas, at least I'm not aware how do you define high area of infection, but they have admitted that some vaccinated people infected with the Delta virus may actually spread the virus. So we came yet another circle around from unvaccinated people being dangerous to now vaccinated people being dangerous because they're apparently vaccinated, but they could spread the virus without having any symptoms. And so, my head personally just spins around and around with all the science that I have to trust, and I can't figure out which science to trust because it's changing so rapidly. Who can keep track? What is the latest science? And Biden said that even if people get vaccinated and wear masks, it may help us avoid lockdowns. I'm like, wait, what? The whole point of vaccination was to avoid masking and and masking was to avoid lockdowns. Now we have both masking, vaccinations, and potential lockdowns. I'm like, you've got to be kidding me. There's like zero common sense left in the White House. And the only way I could possibly interpret this, they can't be that stupid, right? So it's all political game at the end. That's the only conclusion I could reach of with my limited imagination, is that they just want to create more panic about COVID and more lockdowns and more worrying to cripple the economy so that before the midterms, the Democrats could appear like they're the saviors, print out more money, give out more free money, pass the infrastructure bill to convince the people to vote for them, because the only Democrats could save them from going broke because of the lockdowns that they themselves instituted. And they're probably getting worried now that if you look at the polling, Trump is coming up again very strong. Apparently 70% of Republicans would vote for him again in the primaries. So who would challenge him? I don't think DeSantis would challenge him, because why would he? He's perfectly happy to be the governor of Florida for now and then run in the next cycle. So the way it's all going right now, I now believe if Trump is going to stay healthy and in normal health conditions that he actually can run, he would run again. And so the Democrats are getting worried and they're coming up with all sorts of new lockdowns and shutdowns and masking and
I was just going to say that maybe one positive piece of news on the COVID front was this last week, a vaccine company called Novavax, they had very positive data for their vaccine. And this vaccine's a little bit different than the vaccines, say, from Pfizer and Moderna, which are mRNA type vaccines that use that as the mechanism. This is a more traditional type, similar to what was used for a hepatitis B, and back, which came out in the 80s for the first time. So it's a little bit of an older technology, but it's actually shown to be just as efficacious as these others in the trial data. One, and then two, it has a slightly better side effects profile than the Pfizer or Moderna. So there's, but who knows how long it'll take to come to market. It's just it did have positive data for that this last week, and I could that might end up being the favored vaccine of people, even though a very high percent of people have been vaccinated already.
Yeah, and Moderna actually has been down for the last 2 days, like we discussed it before. And now with this news, to me, then the situation for Moderna valuation and pricing looks even more precarious the way it's trading at. And at the same time, we also had really kind of bad economic data coming in the last couple of days. There was a big miss for June new home sales, which actually fell over 6%, while the estimate were for a growth of 3.7%. And the prior months was revised down significantly by almost 2%. And so now we have a third straight month of decline of new home sales. At the same time, durable good orders also came in below expectations. And so, at the same time, the inflation data is coming in above expectations also. Even IMF said that there is risk that transitory pressures could become more persistent and central banks may need to take preemptive action. So it will be interesting tomorrow if our Fed chief is going to follow their lead or not. As one example that came up recently is that rent growth is going up over 7% year over year. And that's the largest increase in the Zillow series, although they're not that long, maybe a decade or two. Still, now the rent increase is gonna flow into CPI. And so tomorrow Powell is on deck, obviously. Will be very interesting to see what he has to say. And if we look at the S&P 500 chart, it was down 0.5% today, like I said. And so it's still above the vol trigger level, which is 43.45. And so the level is the Soja level 43.50 is right there. So I think that's the level that we need to be watching around there. If on Powell's speech, the market trades below it, then it's very likely we will revisit these local lows around 42.40. But at the same time, we had 5 days in a row, which is very bullish statistically. Usually, if we have 5 days up days in a row for S&P, in the next 5 days, I forget the exact probabilities, but from memory, about 70% we close higher 5 days later. So perhaps a little drop on Fed that will be again bought quickly, as pretty much every other drop. And I actually have a chart to share. So it's from Bank of America. If you see that the recovery from the 2 sigma S&P drawdowns now is at all-time low in 2021. So buy the dip mentality is growing stronger and stronger. We have the price recovery has never been faster than it has been this year. At the same time, the number of 2 sigma events has been the highest as the high was set in 2014. So we have lots of sharp drawdowns, unexpected, and even sharper people buy the dip, and we have even sharper recovery. So if you look at this chart, it obviously speaks for itself. And at the same time, we didn't have a 5% pullback for a while. I have another chart to share for that. That one is from Goldman Sachs, and you could see that we have had, well, by now it's probably 180 trading days since the last 5% S&P drawdown. While it's up there, you could see that there were quite a few events in the last, 80 years or so that had twice as many days. So while we haven't had 5% drop for almost 200 days, it doesn't mean that we have to have it, obviously. Statistically, the 5% pullback is likely, but last time we had 400 days without a 5% pullback. So that's a year and a half. I think it was around 215 or 16 or something like that. So we could happily go pretty much almost another year and still not have 5% pullback. And at the same time, bonds is up a little over 1% on the TLT. And you could see, and we talked about this before, pretty much every drop in bonds seems to be extremely systematically bought. And now it's trading above its recent moving average. And so tomorrow, again, is another big day for bonds as well, depending on what Powell says and how the market obviously interprets what he says.
Mhm.
But
The
so
dollar,
far, yeah.
the dollar was down today, though, which I found interesting. And even though the market was down, and we saw bonds up, we saw the dollar down a little bit today. And so it's the really, I mean, that it was really about 4 or 5 days ago is when it topped out. And there were a lot of people that were looking for a breakout, including me. I was looking for that could be a real bear signal for the stock market. And but it's pulled back now. Whether this will continue, I think Jerome Powell's statements, whatever that is, it's going to drive the dollar one way or the other. But it's it could be it'll be worth watching.
Right. And also, we obviously have to look at Nasdaq charts, especially for tomorrow. Nasdaq was down, closed down around 1% today, a little more, over 1%. But it's down a lot more after hours because, as obviously everybody knows, we had very important reporting today. And Apple earnings exceeded expectations dramatically. People were very happy about their phone sales, etc. But obviously, it all has been priced in because Apple has been going up nonstop, and but so it was down after hours.
Yeah. So it's down just a little bit, but Tesla was up after hours yesterday,
Right.
and it was down quite a bit today. It was down over 20 for a little while today. So.
Right, and so if you look at the Apple chart, you could see that it's quite far away in the stratosphere as well. So I wouldn't be surprised if it pulls back a lot more, thus dragging Nasdaq with it as well.
Yeah. So you think it, and it had a kind of in a very short term, kind of a double top here, right? Well, almost. Right. And so if it follows through, that could be interesting trade maybe. But Tesla's really the move that Tesla made today wasn't all that unusual. It's down a little bit more after hours, but it really just moved in line with the market. It didn't really didn't plunge, really in relation to the market.
Right, but I think Tesla is eventually people will get concerned. Remember, like a while back, Musk was saying that he really doesn't want to be the CEO. And so people kind of ignore this. But at this latest call, he's saying that I will no longer default to doing earnings calls. Obviously, I'll do the annual shareholder meeting, but I think that going forward, I will most likely not be on earnings calls unless there's something really important I need to say. So, I mean, people are just brushing it off. But to me, it seems like he's trying to extract himself from Tesla ever so gently and slowly, unless I'm misreading this, but now he doesn't even want to do earning calls. So what is this? And at the same time, this infamous futuristic truck is postponed till next year. But, everybody knows it's a pipe dream for next year as well. Right. With outdoors, etc. We talked about this. So it's concerning basically that all of the earnings reports that are coming in, the stock is selling off. And Tesla especially is the reasons, like people keep asking me, why are you so, upset about Tesla? But because it's governmental subsidies that they're wasting, kind of. And so not they only wasting the subsidies, the earnings that Tesla ever produced are less than the subsidies they have received from the government. And so Elon Musk beats earnings because of the government subsidies, and then he's awarded half of those subsidies as compensation for himself. So it's not really true capitalism in the sense that he's just surviving based on government subsidies, which will be at least good if he wasn't pocketing most of the subsidies himself. But, that's how it goes, right? And on top of this, Microsoft also had another earnings report today, which also was beating expectations and yet trading down after hours. The only good reporting was from Google, and which is trading up after hours, apparently because the advertising is doing really good. And I could only assume that it's because most people are staying home, so they're watching more YouTube videos like ours, hopefully, skipping those silly ads while Google pocketing the revenue. So Google was up after hours on earnings, and Nasdaq tomorrow will be very important to watch, as it obviously also stretched in valuations. And I'm not going to repeat whatever we discussed at the last couple of videos, that the valuations for Nasdaq are pretty high, and Nasdaq is mostly weighted the way it's weighted, that it's based on the largest companies, the one that we just talked about. So how they move tomorrow during regular trading hours is going to be a big tell on where Nasdaq goes from here.
One other thing, I think that there was some really big pullbacks in a lot of China stocks today. There was over the last several days, China has been cracking down on different sectors of their economy that they don't want private companies involved in, like education and so on. And so a lot of China stocks have really pulled off their highs. So yeah, some really precipitous move down over 5.3%, but really it was, it's off a good 35% off its high from back in February. And some stocks like Alibaba have really tanked, right? And
I was just gonna bring up Baba stock, right? Could be a good buy if you believe in China and that they won't completely privatize everything.
Yeah, Jack Ma is he's according to China watchers, he's sort of fallen out of favor a little bit. He used to be this kind of emblem of Chinese capitalism, if you will, if it is capitalism of sort, markets. Let's put companies or markets, but he was sort of this emblem, and now he's sort of much more reclusive. And there are a lot of people that speculate that he's fallen out of favor with the leadership there for whatever reason. So this has clearly tied them a little bit, but it's off nearly, well, not 50%, but a good 40% off its high. And so I think it is worth watching for a potential buy somewhere.
Yeah, the valuation is pretty good for Baba now, especially compared to New York, all of the Nasdaq stocks we talked about. But yeah, but it's of course risk of China, but there is no risk, no reward, right?
Exactly.
And another interesting thing that I saw today, just to quickly to point out, the AMC stock, people were saying that 80% of AMC trades are going through the dark pools. And so the Wall Street boys bets were upset that it's not a free market. But I mean, what do you expect when you trade commission free? How, if you don't pay, then you are the product. So this is what happens when you don't pay commissions. Somebody has to fill your orders, and why would they fill them for free if you don't pay commission? So this is what you get. And so because of that, your liquidity is kind of obscured, but that's the price you pay for free commission. And Victor was talking about this all the time, that
that's the something that Victor would often says, is that there's an incredible amount of infrastructure needed to run all these markets, everything from the markets themselves to even like the information services that we're using here, and somebody has to pay for it.
Right.
I mean, if everybody's a good trader, then nobody's paying for it, right? And so somebody has to lose money. Somebody has to make bad trades. Somebody has to be the sucker or the bag holder. Those are the people that pay for all the infrastructure, whether or not that, and it's a little bit maybe cynical sounding, but it's true. It's very true. Those are the people that pay for everything. And definitely Robinhood has never been free. It's no upfront cost would be how I would put it. There's no upfront cost to trading, but it's never been free. Every trade that I do on, I use Schwab myself, but I think, pretty much the top brokers, most of the top brokers would be the same, that I get, some pretty good order improvement sometimes on my orders. And although I pay something, it's like, $5 or $6 a trade. It's well worth it. I get much more than that on order improvement on most of my orders.
And when is the Robinhood IPO? Isn't it supposed to be this week?
Robinhood, that's right, Thursday. Yeah.
Hopefully it won't do what Coinbase IPO did to crypto market.
Yeah, it's well, and they're trying to play in crypto, of course, and I think that's one of their attractions, is that someone can trade stocks or crypto kind of without really distinguishing between them, unlike in a regular brokerage account. And that's one of the attractions. Now you don't really own the crypto in the sense of, if you buy a Bitcoin, you can't send it to a Bitcoin wallet out of your Robinhood account, but you would have to sell it, take the dollars, and then buy the Bitcoin or whatever somewhere else. But I think it's just a matter of time. It's be doing something similar to that, where they'll let you hold crypto and so on. But we're not there yet. Yeah, you hold it as it's sort of a, I mean, if you want to be kind of cynical, you call it a bucket shop, where, I mean, back in the old days of the bucket shops, you wouldn't ever own the stocks, right? It was just trading on paper at a broker, and they would put the prices up, and they get the prices from somewhere, but you wouldn't actually own it. So if you were a really good trader and they didn't, and you made a lot of money, they might not be able to pay you.
Wow.
Unlike, and then, SEC came about and so on because of that. But the Robinhood doesn't, you hold them on paper, and that's the, they may change that, but in the near term. But I was just saying that I think other brokers will eventually get to the place where, in the next year or two, we'll get to the place where you can hold crypto in those accounts, and like a Schwab account or Fidelity or whatever. They've been planning it for a long time.
Yeah, speaking of crypto, I read that Binance was in the news today. They have reduced their leverage for new people to 20 times only. So that was an interesting reduction. How much was it before? I wonder if now they allow only 20. That's still pretty high leverage for crypto when it moves 10%, 20% in a week.
Yeah, it was 100 to 1, but not for US customers.
Right.
And the other one that did reduce their leverage limit was FTX, which is even bigger than Binance when it comes to derivatives trading. And it's not available for US customers either. There is a Binance US, but they maybe allow like 5 to 1 leverage. But it's for their ex-US customers that you could have gotten 100 to 1. And they've dropped that down to like, whatever it is, 20 to 1 or something. But the other thing that they dropped down, there used to be able to move, if you didn't have a verified account, you could move up to 2 Bitcoin a day out of Binance. And back in the day, in the early days, they didn't check where you were, where you lived. And only then did they make it that if you're a US customer, you couldn't use a regular Binance. And then they wanted all US customers to get verified on their Binance US. So there were a lot of people that still had these old Binance accounts and maybe had some assets there. And this was back when, let's say, Bitcoin was 9,000 or something like that. So having 2 Bitcoin is not that much.
Right.
But then when it goes up to 60,000 or 40,000, it's a decent amount of money. So so now they lowered that from like 2 Bitcoin as the limit to like 0.06 Bitcoin or something, and really small, like basically it's about like $300 or something. And so, so they're just running into the wood chipper. They're having to do all this because they're about to get sued in about 30 different states in the United States, and they know it, and they're trying to backpedal their way out of it. There were rumors that the CEO is being asked to step down. He denied it, but I could see it happening because he kind of very was very insistent that they weren't going to accommodate these different regulators, and now they're suing them everywhere, in all these different states. They're starting to emerge, and different countries in Europe and so on. So it's like, was that a very wise strategy? Probably not. It wasn't the best thing to do.
And it looks like stable coins are getting into more and more scrutiny every day. Yellen just, I think today, is planning to start the president's working group, some sort of commission on the markets with a whole bunch of other financial controller and other people to discuss stable coins. Basically, they're concerned by the rapid growth of stable coins, their potential use and of means of payment as risk to consumers, national security, financial stability, all of it. So they want to create some sort of report to, as quickly as possible, to ensure that they could put in some new regulatory framework for it, and to discuss benefits, risks, and to create some sort of regulations to cover the gaps that currently exist with it. And one particular concern that they had, it was the Tether claim that they hold lots of commercial paper, which is what caused the issue last time around during the global financial crisis. So
that wasn't what blew up in the global financial crisis. So I mean, it was.
No, I meant to break the buck on the money market funds or something. Was that?
Yeah, there were a few money market funds that broke the buck, but it was because they had some other like these structured products that ended up not being liquid, and then yes, some commercial paper ended up not being liquid for a few days, and so they couldn't meet redemptions and so on. But I think that actually the regulation is, if there is some regulation, it could be a good thing. It could be a bad thing, but it could also be a good thing, I think. And I think there should be some regulation. There's some stable coins, like you say, Tether, where there's always been a question about the assets that they have behind every one Tether. How many dollars of assets you have behind that, and are they just issuing this without regard to their asset backing? Whereas others like USD coin, USDC, and there are a few others where it's backed 1-to-1, and it's audited, it's all in US banks. They report to the state of New York, which is one of the more tougher regulatory environments in the US. And so I think that some will be actually viewed as a kind of model for if others want to do this, then if other companies want to issue some kind of stable coin, then this is the right way to do it. Whereas some might be completely barred or restricted from operating in the US unless they change their business model and the way they do things, like Tether. But I think USD coin could be could pass muster. They've got audits going back to the beginning of the coin. There are people that say that, well, the Fed doesn't want private issuers, but I mean, effectively, there's all sorts of private issuers of money in the US all the time. When you get a loan, writing a check against assets they don't even have. And they don't hold those. It's not like they pull money out of the vault and give it to you. And I think that some of the people that talk this way about stablecoins, they have no idea how the banking system actually works. That so I think there could be, as long as they don't get heavy-handed, which could very well happen, it could be a very good thing for them, for crypto to have. The stable coins are what, emergence of stable coins is what has led to really the rally that we saw last year and the rise of decentralized finance. And had it not been for stable coins, that would have happened much more slowly. So I think that it could be a good growth engine for the economy if they don't kill it, but at the same time that they prevent fraud and things like that, which a proper regulatory agency should do.
Last time we spoke, there were rumors that Amazon is going to accept cryptocurrencies anytime soon. So of course, Bitcoin ran up on those rumors a lot, but then the next day, or I forgot what the timeline was, a few hours, whatever, Amazon issued a denial saying that they're not planning to accept crypto this year or next year. They're just researching and looking, and maybe potentially in the future. But regardless, Bitcoin seems to be holding up pretty well even after the denial.
Well, the thing is that, yeah, it was up really big, about 10% at one point yesterday, and has maybe pulled back a little bit from those highs. But yeah, Bitcoin was up over 40,000 for a little while yesterday, and I think that 40,000, there's some psychological resistance there, but I think the real resistance is more like 42,000 or so. And then you've got the 200-day moving average here at, it's now like 44,000. So yeah, it can get there, but it might take a little while. But I think getting back above 40,000 is pretty bullish. And then I think with Ethereum, it's more like the 2,400 was the equivalent level. But these are both. I think that this is sort of the nature of crypto to have these very intense bear moves and then an intense bull move. It's not up 7 days in a row, and it could go on more days, just as what we've seen for the S&P 500. But I think it's interesting to see it moving up, even as the stock market's chopping around and going down. It's not all that surprising. It's interesting to see some of the moves in like a Coinbase, which I think is pretty closely tied to Bitcoin. That there was, it made a really nice move yesterday, up about 9% yesterday, and then down about 4% today. And then the other one that I mentioned, which is up going nicely from its low back here on Monday and Tuesday, where it got down below 11, is this Galaxy Digital, which is now about almost just under 15, but it's I think the last time the Bitcoin was at 38,000, this was at say 22. So it could it's not tied directly to Bitcoin. There's a lot of other things going on with it, but it's it might be a little, it is undervalued compared to its assets right now. It's trading below book value right now, which is unusual for any kind of crypto stock. Coinbase is richly valued, but it could be a good trading vehicle, I think. So it's worth watching. But I think that the direction in the near term is up, continues to be up, and I could see it both Bitcoin and Ethereum, as well as some of the other leading ones like Cardano or Polkadot. I could see these continuing to rally over the next few weeks, and there'll probably be a pullback. But I think that the near term direction is up. For me, I think it's worth watching some of these stocks where there might be some buying opportunities still here for one like Galaxy Digital. We mentioned like Alibaba also that might be there might be a good buying opportunity coming up. It might not be today or tomorrow, but probably in the very near future that could be a good buy point.
Andy, thank you very much. And we'll see you all guys on Friday after the exciting Fed announcement.
Thank you, everyone.